Hello there, this is the Bookkeeping Master on YouTube. This is a video presentation all about the basics of limited company accounts. I am the Bookkeeping Master, that's my YouTube name. I am also the owner of freebookkeepingaccounting.com. On that website I have over 220, I think it is, 220 videos all about bookkeeping and accounting. They're all for free, so go and check that out. There is also a blog and lots of other things, so feel free to visit that site. The purpose of this presentation, this PowerPoint presentation, is to help you understand the difference between sole trader accounts and limited company accounts, because there is a major difference between the two. The purpose of this presentation is also to help you understand the purpose of limited companies. Why have a limited company? And then last but not least, the purpose of this presentation is to help you gain confidence in accounting for limited companies. So no matter your reason for watching this presentation, it could be that you are currently studying some sort of accounting qualification. It could be that you have just started a limited company, or that you're looking into starting a limited company. It could be that you are a bookkeeper or accountant and that you want to know a bit more about limited companies. No matter what it is, you're welcome obviously to this presentation, and I hope that it's going to be of benefit to you. I have made some notes. I will not cover everything, just the basics. I'm not going to cover anything to do with providing tax advice. I will go through limited company tax and how the company is taxed, but I'm not going to give tax advice. Obviously, I don't want to be sued, and it's not wise for me to be giving tax advice online. I am based in the UK, but the principles are used internationally. Let's try and get that off the screen. There we go. I am based in the UK, but principles are used internationally. So the accounting principles covered in this presentation are universal, but there are some things that are just limited to the UK. Every country differs slightly, so please keep that in mind. You will have to do your own sort of research after watching this presentation. Research everything and seek the advice for a tax professional. This presentation was put together fairly quickly. I'm not reading off a script either, so if I stutter in places, if I have to take a moment to think, if there are spelling errors, no matter what it is, please just be forgiving. I've put this together quite quickly. I don't get paid for these videos. So I had a limited time to put this presentation together. I'm also very relaxed. You'll notice that this presentation is very basic. I'm really not into having all singing or dancing presentations, and I'm not just here to spill off information to you. I'm very relaxed, so I'll just go through the presentation in my own time. I'll try and explain things as clearly as I can also. There is email support available. If there are certain things that don't make sense, then please just drop me an email. I do provide email support, and there are details about that on my website, freebookkeepingaccounting.com. There's a page all about email support and how to gain access to that email support. So sole trader to limited company. I actually made this presentation a little while ago, so some of this stuff I'm going to read is going to be surprising to me. I can't remember what's on some of these slides. So let's just go through it and go and experience the unexpected. So transition from sole trader to partnership is not too big of a step. I've already mentioned it, but these are just notes that I've made. These sentences are not constructed that well, they're just purely notes, so please just keep that in mind. So if you transition from a sole trader to a partnership, it's not really a big step. The difference between a sole trader and a partnership is that there's at least 2 owners, sometimes 3 or 4, rather than the single owner. As far as the accounts and other things, there's not really much of a difference. But the transition from a sole trader or partnership to a limited company is a much greater step. It's quite a big jump from being a sole trader to a limited company, and that goes with the accounts. I've put the accounts on here, look. So the things that differ from making that transition are the responsibilities of the owners. There's a lot more responsibility if you are a director of a limited company rather than a sole trader when you just own a small business. The accounts are very different. There is some very strict guidelines for limited company accounts, and there isn't so much for sole trader or partnership accounts. The tax is different, and we'll cover that later on. I think there are some slides giving a bit more detail about each of these points, and the legal setup of a sole trader and limited company is also very different. But these are the 4 main areas in which sole traders differ from limited companies. If I'm going too quickly, just pause the video. You can watch it several times, pause it and make notes, do whatever you need to do. Public and private organisations, or public and private sectors. So in the media, or a friend or someone at some point has probably mentioned the public sector and the private sector. You may know what that is already, but if you don't, I have some explanation here. So the public sector is generally governmental owned authorities and organisations. So local authorities like council authorities are in the public sector. You're paid with government funds. The organisation isn't really looking to make a profit, it's just providing a public service. Emergency services, here in the UK we have the NHS, there's also a police department. These are emergency services, and these are public sector organisations. And there are other public sector organisations that I could mention. The private sector is built up of unincorporated and incorporated. Incorporated being formed into a company being a limited company, an unincorporated company or business, we should say, is like a sole trader or a partnership, something like that. And there's some more information about this down the bottom. Look, unincorporated is sole traders and partnerships, generally speaking. Incorporated are public limited companies and private limited companies. So limited companies, the difference between public limited companies, which are PLCs, and private limited companies, which are LTDs, is that public limited companies generally have their shares listed on a stock exchange, whereas a private limited company doesn't have their shares listed on a stock exchange. They can still have investors come into the business, but their shares are not publicly traded. So this video will be all about private limited companies, which is the sort of companies you'll be dealing with. It's very unlikely that if you're watching this video that you'll be accounting for a public limited company. That's a whole different game. Private limited companies are the majority of limited companies, and they're the sort of companies that we account for as accountants. Differences between unincorporated and incorporated. So the ownership, if you have sole traders or partners, it's owned by the sole trader. If you are a sole trader, if you own a business, you own 100% of the business. If it's a partnership, it's basically you and your partner, you may have 50% each, but you are the business. The sole trader is the business, whereas ownership of a limited company or ownership of a company is owned by shareholders. So even though you may have started the business, you're referred to as a shareholder rather than as a sole trader or the sole owner of the business. And generally, sole trader and partner businesses are referred to as businesses, whereas limited companies are referred to as companies. So businesses and companies, shareholders and owners, or sole traders, or partnerships. Hopefully I'm not confusing you. Please make notes, watch the video over and over again. Legal status: the sole trader or partners are the business, as just mentioned, they are it. If you're a sole trader and for whatever reason you're having some sort of legal battle, it's you the legal battle is against. You're the sole trader, you're the business, you are it. Whereas with a company, the company is actually a separate legal entity from its owners, or its shareholders is the right terminology to use. So if you own a limited company or are a shareholder in a limited company, you're not at risk. You're a separate entity from the company itself. It's the company that's in trouble, not so much the directors. And that's just very loosely speaking. I could spend a whole video on that as well. But the important thing to remember is the legal status is different, and this is how it's different. The liability: because the sole trader or partners are the business, they're liable for all debt. If your business owns debt, you can have the bailiffs knock on your door. You could potentially use your house to pay business debt. But with a limited company, the liability is limited, hence the word limited companies, limited liability companies. They are only liable for the amount they have invested in the company. So if a shareholder has £10,000 invested in the company, that's the amount he or she can potentially lose. Whereas a sole trader or partnership, you are liable for all debt, all business debt. So that's one benefit of having a limited company. Legislation and regulation: for a sole trader, there is none, really. That's it. Pretty straightforward. For a limited company, there's Companies Act and Articles of Association. I'm not going to go into great detail about that. That's for another video. Management: for a sole trader, for a business, you have an owner. For limited companies, you have directors. I just skipped a slide. Let's go back. So if you are 100% the owner of a limited company, you are referred to as a director or shareholder rather than the owner. A sole trader is the owner, whereas in limited companies you have directors. The financial statements are very different in the way that they're made up, but also the financial statements for a sole trader are private. You don't have to disclose them to anyone apart from tax authorities. But for limited companies, accounts are made public through Companies House. So any limited company, you can go online. As long as they're filing their accounts, you can find their accounts and view them online. They're public. So they are some of the main differences between unincorporated and incorporated businesses. Try not to get overwhelmed with the big terminology of unincorporated and incorporated. What I would suggest is just use the word sole trader and limited company. That's what I do. Makes it a lot easier. Hopefully you're not too confused. Watch that slide again if you need to. So the financial statements for a limited company, the profit and loss statement that you would refer to as a sole trader is actually referred to as the statement of comprehensive income. So it has a different word, different title, a different name. So profit and loss statement that you would refer to in a sole trader is referred to as a statement of comprehensive income. Then the balance sheet is referred to as the statement of financial position. And then cash flow forecasts, that's the general loose term used in accounts, especially for sole traders. But the official term for limited companies is statement of cash flows. Now, I do have some videos about these things. If you don't know anything about profit and loss statements or balance sheets or cash flow forecasts, if that wording is all new to you, then just go to my website, freebookkeepingaccounting.com, and there's whole videos on profit and loss statements and balance sheets and cash flow forecasts. So you can watch those videos to deepen your knowledge of those statements. Let's see what's next. Financial statements. Why do we keep financial statements? This is a quote taken from the conceptual framework of financial reporting. It sounds very posh, but it's an official statement that I thought would be better to share rather than trying to word it myself. It says the objective of general purpose financial reporting is to provide financial information about the reporting entity that is useful to existing and potential investors, lenders, and other creditors in making decisions about providing resources to the entity. So let me read that again. I stumbled at the beginning a bit. The objective of general purpose financial reporting, so the objective of financial statements, of reporting financial statements, of recording these things, is to provide financial information about the reporting entity or the business or company, so provide financial information about the company that is useful to existing investors like the owners, the shareholders, potential investors, lenders and other creditors, banks, suppliers, in making decisions about providing resources to the entity. And then I've got some notes down the bottom here. Financial information is found on the financial statements. Things like profitability, the assets of the company, the liabilities of the company, how healthy the cash flow is, etc. Now, this isn't the only reason why we keep financial statements for a company. There are also tax reasons and legal reasons. By law, you have to keep accounts. And how do you know how much tax a company, an entity, a person owes unless you have the records? So there are tax and legal reasons why financial statements are kept also. Now, this would be a good place to take a break. Go and stretch your legs, pause the video, go and have a drink, do whatever you need to do. Just pause the video because I'm not going to stop here, and then just come back. So go and do that now. Otherwise, you may just be bored to death. Let's carry on. The statement of comprehensive income, which you may know as the profit and loss statement. It records the financial performance of the company, and it's basically income minus expenses, which equals the profit or loss of the company, hopefully a profit. Or in other words, the revenue, because we don't generally refer to income as income when we refer to limited company accounts. We use the term revenue, and we don't refer to profit. It's generally profit from continuing operations. So revenue minus expenses equals profit from continuing operations. It means the same as income minus expenses equals profit, but this is the basic terminology that is used and that you may be familiar with. With limited companies, this is the official terminology that you should be using. Revenue minus expenses equals profit from continuing operations. There is a tax thing. This doesn't include tax, but don't get confused. Just ignore what I just said. No, don't ignore what's on the presentation. Revenue, that's correct. Just ignore what I said about tax. Statement of financial position, which you may know as a balance sheet, displays the financial position of the company, and it lists things like assets, liability, and equity. Now, the closest thing I can refer equity to is like capital. With a sole trader, you may know what capital is, the amount of money that the owner has put into the business. The limited company equivalent of that is equity. There is some difference, but that's the closest thing I can relate that to. So we have equity and capital. Then we have assets and liabilities. What's next? Terms and concepts. So these are some things that you need to be aware of. There are many more terms and concepts used in limited company accounts, but these are some things that you should be aware of. Going concern, that's used in limited company accounts quite often. It's a term used. It means that, have I worded this? Prepared on assumption. So the accounts are prepared on assumption that the company will continue in business for the foreseeable future. So you always must have going concern that when you prepare accounts, it must be on the assumption that the company will continue in business for the foreseeable future. If that's not the case, the business is likely to stop trading or is financially struggling and could go under, then that's something totally different. But that's very unlikely to happen to you. Going concern, just remember the term and what it means. This is one of the concepts that we use in financial accounting for limited companies. Accruals, meaning that income and expenses are accounted for that concern the same goods or services and the same time periods. So you may have heard of accruals and prepayments. It just means that when we provide accounts for a limited company, that the information that we're accounting for actually falls in the period of, how can I word this so you understand it better? When we use accruals, we have to ensure that the information that we are using in our accounting actually relates to the period that we are accounting for. So it could be that you're accounting for a certain year, say January to December, and at the end of December you paid for something in advance that was going to impact the business in January or February the year after. You would have to use the accruals concept. You don't want to account for that expense in the period of January to December because that expense relates to a future time for the business, and it will give you an inaccurate information or inaccurate representation of what's happening in the business because that expense happens at a later time. Hopefully I've explained that clearly. Prudence. If in doubt, report the most conservative figure. This mainly relates to assets. So if you have to revalue an asset, if there is some doubt, which there shouldn't be, but if there is some doubt, you have to report the most conservative figure. Consistency. Use the same methods and accounting practices throughout the life of the company or business. I should say company, really. Depreciation. So I don't know how much you know about depreciation, but if you depreciate a certain way, say straight line method, you have to carry on using that method throughout the life of the company. You have to be consistent. You can't chop and change from year to year what sort of methods and things you're using. Same with like stock taking. There are lots of stock taking methods like FIFO and LIFO. If you choose one of those methods, you have to stick with that method. How you have valued stock in the past, you have to do so the same in the future. You have to use the same methods and accounting practices, which is consistency. I feel like I'm covering some really in-depth stuff now, so if you are getting confused, you know, this is quite in-depth, but this is all information that you need to know really to understand the basics of limited company accounts. Accounting terminology: statement of comprehensive income or the profit and loss statement. Revenue refers to sales or turnover or income. Profit from operations is the operating profit or the net profit. So on this side, the right side, is the loose term that's used, and the terms that are used sometimes in sole trader accounts. On the left side are the terms used in limited company accounts. Accounting terminology for the statement of financial position or the balance sheet. Let's just go through these. You can pause the video, make note of these. Fixed assets are non-current assets. So once again, the left side is company accounts, limited company accounts. The right side is like the loose term or the term used in sole trader accounts. So non-current assets, fixed assets, property, plant and equipment, tangible assets. Inventories, stock, that's a big one. People use stock a lot. I think I even used it in the previous slide or the slide before, but it's inventories. Trade receivables, debtors, trade payables, creditors, cash and cash equivalents, cash at bank and in hand, non-current liabilities, long-term liabilities, equity, capital, retained earnings. Now this is quite unique to limited companies, but capital / profit balance. The retained earnings are the amount of profit that's being held within the company. So there's lots of terms there. So please just watch the slide again. I'm giving you a lot of information now. Some terminology explained. Retained earnings. So as mentioned, a company may make a profit, say £10,000, $10,000. If the shareholders only took $5,000 or £5,000 from the business, then £5,000 or $5,000 have been left in the business, and that's retained earnings. That's the very basics of it. Dividends. If a sole trader takes money out of his business or her business, it's referred to as drawings. In a limited company, that's dividends. So going back to this example, the shareholders may have taken £5,000 worth of dividends, leaving £5,000 for retained earnings. This is a complicated word for me. Directors' remuneration. That's a wage or salary that a director is receiving. So with a sole trader, basically the profit you make is your income. It's all yours. Whereas with a limited company, because the limited company is a separate entity to the shareholder, you can actually pay yourself a salary or wage, and that's an expense for the company, and that's referred to as directors' remuneration. So an example of retained earnings, you could have the balance at the start of the year. So going back to the example I used, you could have £5,000 at the start of the year that was retained from the year before. The profit from this year was £10,000 again. So that gives us £15,000 in retained earnings minus any dividends paid. So say we took £5,000 of dividends again to the shareholders, that would leave £10,000 in retained earnings. So balance from the year previously, profit is added to that, then minus any dividends paid. I am a bit concerned that I'm going through this too quickly, and as mentioned previously, just watch it again, or you can subscribe to my email support and ask me questions. Is this the last slide? Have we finished already? We have. Some websites here for you to check out. Companies' accounts are filed online, and you can view companies' accounts. To get a good understanding of what limited company accounts look like, then go and view some actual accounts online at companieshouse.gov.uk. That's the UK site for UK limited companies. There'll be a site similar in your country, so you can have a look at that. freebookkeepingaccounting.com, that's my website. There's even other videos, other presentations about limited companies on that website, on my website. So you can go and watch those and get a better understanding of limited companies. And then just go to Amazon. There are lots of books about the basics of limited companies that may provide a better insight than what I have done in this 30-minute presentation. And some of them are dirt cheap. You can pick some of them up secondhand for £1, $1 plus delivery. So go and check out some books. I really hope I haven't confused you. I've tried to make this as simple as possible, but there is a big difference between sole trader accounts and limited company accounts, and hopefully if there was some confusion, then you'll understand that difference. There is quite a big difference between doing the two. There was something else I was going to mention before I finished, and that was, please don't take my word for everything in this presentation. As far as you know, this could be a really bad April Fool's joke in September of 2016. Don't take my word for everything. You cannot hold me accountable for what has been taught in this presentation, as suggested in the disclaimer at the beginning of the presentation. I've done my best to provide this information as accurately as possible, but please do your own research and always talk and get advice from a tax expert or an accounting expert before proceeding with anything on my videos. So hopefully this helps. If you want to drop me an email, My email address is info@bpfs, that's Bravo Papa Foxtrot Sierra -online.com, info@bpfs-online.com. I wish you all the best in whatever your pursuit is. If it's an accounting qualification, I really hope you become qualified. If you are starting a limited company, I wish you all the best in your company. I hope and pray that you have great success. If you are a bookkeeper or an accountant, I hope and pray that you understand limited company accounts and that this video has been of benefit to you. Thank you so much for watching. I appreciate any likes, any subscribers. Please feel free to share the video. This is all for free. Thank you so much.